Okie dokie, this is Coach Mike. Let's go through our focus group watch list of charts. I'm going to have the focus group spreadsheet out as soon as possible. Just having a little bit of issues with email and website server that's preventing me from emailing it out. Going to start out here with Apple. One potential trade I do have on Apple would be, should we begin pulling back tomorrow. What I'd be looking at on Apple is the 1122 105 puts. The reason the 105 puts is, even though I've got this fib target $100.84, I'd want to make sure that I was able to go in the money by this 104.44. And what we want to understand as the stop for that is our high here, 108.04. So basically we have to look like we're pulling back. We can't keep going up with this current trade plan, simply because with the overall scope of the market kind of getting a little bit higher than I really thought it could or would, we need to make sure that we're not just in some big old breakout first. So that's kind of what I'm looking there. When you watch my market overview video, you'll also understand a little more of my approach to the week as well. Moving over now to Caterpillar. A couple weeks ago we had a swing on the Caterpillar chart up to this $100.67 mark. It closed just above that. So if we got some downside to the market, these blue lines here on my chart, these are my weekly swing points. And though I've got a Fibonacci point that says, oh cool, all the way down here to 82.69, I don't think that even on a downside you would want to plan for any more less than 88.62. If it were to start making a down move, I would use that high of 102.37 as your stop. That being said, I'd be looking at the December 20th $90 puts. Now the other thing is with this weekly swing low right here at $100.52 being broken, and that 99.49 that we had talked about before, that coupled with the earnings that were pretty decent could give us a bit of a high side trade. But I'd want to go out to January 17th 2015 for this 115.64 target, and I'd want to play the 110 calls. I'd want to play something that is at least close to the money up at these two tops. Now I do want to tell you, with Caterpillar, one thing to notice is over the past 3 weeks, declining volume. So even though it's moving up, it's starting to decrease the volume on it, and that's something that we'd want to be aware of. But I do think that it could still have a shot, if the markets continue upwards, for it to continue upwards as well, at least to get you into this 110 area, if not that 115.64. Moving over to Chevron CVX, their earnings, they did beat the earnings estimates. Friday morning they were a little late to report them, and it ran right up into this downtrend line that I've got. And also, I had this fib target 120.10, and it actually broke it just by a couple pennies, closed below it. I want to watch and see if it pulls back from this trend line. A break of that trend line, and even though I'm in some December monthly 125 calls, I might take January monthly 125 calls on a break here. But I'm also looking at the December monthly 110 puts in case it pulls back from this trend line, because even though they beat the estimates on earnings, the funny thing about it was still a decline in earnings from the last quarter for the actual EPS number, which doesn't matter a whole lot. But also too, just kind of looking at crude and studying the crude chart, it kind of seems like it could be to a point where we see a little bit of a pullback after the bounce it's had. So I'm going to be watching CVX for that. Also, I had put in on the spreadsheet for this 15-minute chart, you see what I've got it marked as. Now, one thing to look at, I don't think I would want to trade this first one for the 119 puts, but if it were to come and close a 15-minute below the 118.85, I think I would like the 117 puts. But also, unlike last week, we've got a couple calls trades, not really day trades, but little, like I call them, the pop trades, the ones that you trade the following week out that you can hold a day or two if need be. So I'm going to be watching that on Chevron. I think Chevron's one that's giving some good trades if we're just prepared and ready to make them. Facebook, I actually had a Fibonacci extension target of 71.77. Even though this chart doesn't show it, on the earnings day it went down to 71.65, so it did kind of hold this target. If we start moving up here, I do think we have potential up here to this 83.74 area is where I'd be looking. And I think that's going to award some opportunity. I'm going to go over to my 60-minute chart here, and what you can actually see here is this down move kind of got really close to filling our gap, but bounced off of this swing high point. I've got some tight areas that I don't know that I want to trade it at first, but should it break above $76, I think it's got a really good potential to shoot up very, very nicely. It could even be something that shoots up about $4 or so. It'd be almost $5 to fill the gap from that point. So even though I might not make like a quick knee-jerk reaction Monday on Facebook, it's going to be one that I'm actually watching for the potential to break and fill the gap. They actually did beat on the EPS estimates. They put out there that the operating costs were going to be a little heavier for the upcoming quarter. But, LinkedIn did pretty good, had a really nice move on that. And, I really think Facebook got beat up a little more than it should have. So, going to be watching for that opportunity. I think it could give us opportunities on our 60-minute chart, trading out that following week or 2 weeks out, and I'll be watching for those opportunities as well. But I really think for a swing right now that we want to be watching the January 17th, 2015 $80 calls. A little bit pricey. They're probably going to be in that 232 range for where we would be buying them. But you can make your Thursday close your stop, or you could make this gap fill your stop. Either one. I think the reward far outweighs the risk. But again, with the market overview reference, I do feel that it's in our best interest to kind of wait and see how the market shapes up Monday. I think it made a little bit too much of a move on Friday. First Solar has earnings on 11/6 after hours. If you're in that trade to that 63.76 target, I think you're still okay to trade that. But I wouldn't enter a new trade before earnings. And if you're in that other calls trade that we put out a couple weeks ago, make your stop. I hate to say all the way down to 56.95, but any close below that, you might want to not be in it. And I'd also watch a little swing low point here at $60.42. Otherwise, I still think it's got a shot for that 63.76 target area from the previous trade, but I'm not interested in a new trade. GLD dropped below that support level that we'd been watching. It bounced off of it a few weeks ago. We talked about last week on the video how it retested the prior swing low and kind of pulled back. If you got that straddle or strangle play that we talked about last week, still hold your put side, but use about 114 as your stop. Right here, right now, though, I'm not really interested in a new trade because just like I think the markets overdid the jump up on Friday for the Japanese stimulus, I think gold's reflection of that was a little overdone as well. So definitely wanting to kind of watch that before I advise any type of trade on it at this point. Goldman Sachs, we've got one trade on the December 195 calls. We got a couple targets up here. 192.74, 195.49. I sold my 190 calls on Friday because this was a 5-year, actually an 8-year weekly swing point, and at first it had hit it and pulled back from it, so that's why I sold those. I'm not going to take any more calls trades up into these targets, but I'm going to be watching closely for when the next put swing would be, and that's kind of what I'm waiting on Goldman Sachs. Last week, I put 3 potential trades on the spreadsheet. The 2 calls plays are up pretty nice, and I think you can hold those for now. I would make your stop on those 188.07 for the calls trades. Lockheed Martin, when they reported earnings, they dropped real hard, and then some decent news came out and they shot up. I'm not interested on shorting here, but I am interested on having my chart set up with alerts for where I might go long. I might go long off of the swing point, either one of these Fibonacci points. But at this point in time, we had a trade on there for this breakout last week. We were only looking for 190. It exceeded that, so you made money on that if you traded it. And I'd have sold that Friday. I didn't trade it. But now I think we need to wait for that little bit of a pullback to get us our next entry on Lockheed Martin. UPS, last week we had on our trade plan with the gap fill, the week before last, with the gap fill, right here, it was last week. You got the gap fill on Monday, you charged upwards, and we were looking for two potential target areas, the gap fill or our prior swing high. You got both of them. That trade's over now. If you didn't sell it Friday, on any pullback tomorrow, I would sell it. And I don't want to play short into this because I don't know if it's going to do anything more than fill the gap. But I do want to start watching now for the next long trade, but I think it's got to pull back before we get it. Visa. Visa had a huge move on earnings, a little bit bigger than I would have ever expected. Now I want to go back to the weekly chart. I want to show you something here on the weekly. You actually got a W pattern here. And, when do we buy the W? Well, when it breaks out of the W or when it retests it. It broke out in the after hours when they reported earnings. So I want to watch these two swing points, the prior swing high here or that W, for the opportunity for the next long entry. I was actually kind of shocked with how Visa, after having a rough couple quarters, had a really good quarter this last quarter. And, we might see that give a little change in the market. The earnings have actually been better than expected. That's why the up move on the markets have been a little better than expected. And, a lot of times we get those up moves even on great earnings in the past, and we see that unsustainable up move, a little bit of a decline, and on that decline, that's where you go long after the earnings for some good probable trades. So, as much as I hate to say it, I'm going to go back over to the SPX chart that I was talking about in the market overview video. It did exceed the target I had, and I thought it was going to pull back on Thursday. It didn't. It looked like it would at first, and it didn't. But it's really starting to match in line with what we saw before on the Russell 2000, and I don't think they're going to tank the market before the midterm elections on Tuesday here in the United States. So Monday and Tuesday might be a little bit slow, although I do think we've got a few charts that could give us some decent volatility, one of those being Facebook, and another actually being CVX from our focus group list. But I think social media stocks in general, because of LinkedIn's earnings and yet how far Twitter and Facebook fell, I think we could see some good volatility as the sector-based momentum starts tugging at all three of those in different ways and really setting them up. So I'll be watching those early in the week, but I really think Monday and Tuesday could be a little bit slow for us. And as we get into late Tuesday and into Wednesday, we should be set up with what our expectations will be. Believe me, I'm ready to get some new swings open, and there's a lot of stocks that are down close to support levels. So if this is just a new breakout in the indices, we still have stocks we can buy at good quality places technically. And there's a lot of stocks that are run really, really well, that if the market started to sway downward on us, we could get some good short opportunities. So, as far as that goes, be a little patient on Monday. My normal Monday routine is I like to watch early and set up for trade plans. I do plan on, in the chat room, I've got some email suggestions from members, and I want to really kind of get into explaining trades before we make them so people are prepared for them. And that's what I'm going to be working pretty hard on early this week. This is Coach Mike. Join me in the chat room as much as you can this week. God bless and good luck.